Hi folks, welcome to Ditto Insurance. Joining me today is a very familiar face again, Mr. Ajay. Now, Ajay here is our senior program manager and has advised over 5,000 clients. Welcome, Ajay. I welcomed you, but I'm also disappointed in you with one thing.
For what?
You didn't tell me that there is a 50% discount going in term insurance.
Discount, okay. You must be mistaken. Yeah, because there is like a price hike going on, right? So it's like you have the complete opposite news.
No. I'll tell you. I know I read it right because it said that I can finish off my premium payments with 50% discount. Now, why didn't you tell me about that?
I think what you're looking at is the limited pay options. I mean, you're probably prepaying your premiums. Is that what you're talking about?
Yeah, but essentially, I'm really paying 50% of what I would pay. Now, as a senior program manager and an advisor to me, and as a dear friend also,
Yeah.
why wouldn't you tell me that this is one great option that I could get this?
All right. So let me first give you an example so that you understand,
Okay.
right? So, say for example, you are paying around 16,000 rupees yearly for a 2 crore plan.
Okay.
Right? Let's just take your case. Like,
Okay.
say you're a non-smoker,
Yes.
you're 26.
Yeah.
For the viewers who want to know about him. Yeah. So, say you're going for a 2 crore plan,
Okay.
right? So, say your premiums are probably around 16,000. You pay for around, say, 40 years,
Yeah.
right? Which
Correct.
is like the extent of your policy
Correct.
for around 65 odd years.
Correct. So
Right.
6.4 lakh.
Yeah.
Correct. That's how much I would be paying.
You'd be paying, right?
Correct.
But say, like you mentioned,
Correct.
okay, you just say pay your premiums for 10 years, you pay 35,000 a year,
Exactly.
which is around just 3,50,000.
Exactly.
So this is what you're considering as a 50% discount,
Exactly. 50% discount.
right? But if you look at a concept which is called as the time value of money,
Okay.
this is not really the case. Okay. So
What is that?
yeah. So if I am to say give you an option to
Okay.
get 100 rupees now and 100 rupees a year later, which one would you choose?
Can I choose both?
No. Yeah.
Okay, let's say I would take it now.
Why is that?
Unless you're compounding 100 and giving me after 1 year.
Exactly, right? So that is the opportunity cost that you probably would have earned some more money getting that amount.
And also the fact
Yeah.
that 100 rupees ke liye I might get maybe a biryani today, and then next year I wouldn't because of the
Exactly.
inflation. It would have become costlier.
I don't think you'll get a biryani for 100 now. But yeah, you definitely would have gotten it, say, 10, 15 years back,
Right.
right? So, but now that is not possible.
Correct.
You see, inflation, comes into the picture,
Correct.
right? So the money has time value,
Okay.
right? So the amount right now, whichever probably you are paying, and the amount that you're paying, like say 30 years down the line, might not
Okay.
be the same.
Understood.
Same goes to your premiums.
Okay.
So 16,000 right now,
Okay.
okay, might seem like, okay, I'm paying a considerable amount right now, okay, but I'm paying it for an extended duration, right? But the same 16,000 after say 15, 20 years, value of that 16,000 is going to be a significantly lesser bump on your pocket.
Yeah, I mean 16,000
Yeah.
right now feels like 16,000.
Correct.
But say after 10 years it might feel theek hai, it's not much.
Exactly.
That's the
and-
beauty of term payments, premiums, right? Because they're locked in just
Exactly.
months. Now, folks, facts like these are the exact reasons why you should consider getting a term insurance when you're young. Ajay has also kept on saying that when you buy a term insurance when you're young, there's a good possibility of locking in your premiums for a very little price. Now, if you're in the market to look for an insurance, then Ditto can help you. We just not help you buy, but also make you understand how insurance works and which policies are best for you. Now, what you can do is head to the description. You'll find a link there. Now, let me remind you, this is not an ordinary link. This is a special link because anyone who goes through this link, we are releasing a limited slot for our advisors to give you advices on a special basis. Now, don't miss this opportunity. Ajay, let me get back to you.
Yeah.
Talking about limited pay and regular pay, I understood that the time value of money is in the picture. But still, is there any scenario where limited pay might make sense?
There are a lot of scenarios, right? So, I mean, in pure, the financial aspect of it, regular pay might seem, quite good, right? But I have seen a lot of, finance professionals themselves go for the limited pay,
Okay.
right? Mainly because of the, the convenience factor, right?
Okay.
So, say for example, I'm someone who's a very high earning professional,
Okay.
right? I'm probably earning good 60-70 lakh or 40-50 lakhs,
Correct.
right? And I have very less expenses,
Okay.
and I'm probably going to say start a family soon, right? Another 4-5 years, right? I just want to probably get my premiums done over it. I don't want these kind of recurring expenses.
Understood.
Already my investments are taken care of.
Correct.
Right, I've already taken care of all the other things. I don't want any recurring expenses coming.
Correct.
And I don't want, when I'm starting a family, these kind of additional expenses coming as well.
Understood.
So since I have a lot of disposable income, I'm probably going to finish them off faster.
Understood.
Right.
Understood.
I also have another thing that, even if I am, going for, like say something like entrepreneurship or an early retirement, right? So when I'm earning well, I probably want to finish these off so that while I'm taking that kind of a risk, right, I can't have recurring payments and other things coming along with probably the amount of debt and other risks that I'm taking.
Correct. That also increases with the age. So what you're saying that if you're younger then, and if you have some money lying around, then a limited pay would be a good option.
Yes, it is. It is.
Okay.
Yeah.
And who should consider a regular pay? What's the profile in your mind like?
See, one, it is like, based on your financial goals, right? So that, at Ditto, we probably ask and, a full understanding of your profile, right? So we get to know about what are the things you have. Do you have any loans? Do you have a lot of expenses to take care of, right? So if you're going to have, say your income is 1 lakh and your expense is probably around that much, you probably aren't going to, afford a limited pay, and, forcing you to go for that doesn't make sense.
Yeah.
Right. So unless you have a good amount of disposable income, and again, these kind of goals like early retirement or, entrepreneurship down the line.
Correct.
Right. And, sometimes it's just a peace of mind. I mean, I know it sounds silly. There was this one person who just said that, I don't want to be brooding about death all the time and I just want to get done with the premium. So there are an n number of reasons.
Correct. Yeah. That's right. Now, you took a scenario of mine. You said that 16,000 paid for over 40 years will amount 6.4 lakhs. And if I pay around 35,000 for 10 years, it'll equal to around 3.5. And then I'll still be insured for the 2 crore.
Yeah.
Is there only a 10-year plan? Are there any lesser plans or more?
So there are so many options. I mean, there are options to pay for 15 years, 10 years, 5 years.
Okay.
I've even seen companies having a single payment year option, right? And within a single year, they pay a lump sum amount of 3-4 lakhs and get the policy issued. So that happens as well.
I mean, now I'm really considering where they get their income from.
Yeah.
That's great. So what you're saying is you have a 5-year and 10-year, 15-year and so on.
Correct.
Okay, understood. Great. Now, any parting thoughts, or rather, let me put it this way, what does Ditto recommend?
So, like I said, we first look at the number of factors, right? So, based on your profile, the amount of disposable income you have, right? So, what kind of, like say if you're currently having a family, what kind of expenses you will be incurring. Based on that, we recommend, right? So, if you do have the, disposable income for the limited pay, you can definitely go for it. Right. I mean, a lot of critics might say that, you're not being very financial, you're not making a prudent decision.
Correct.
Right. But, the math aside, it might make sense for you.
Understood.
Right? Yeah. But again, if you're somebody who's barely able to make up for your expenses and EMIs, I would definitely suggest go for regular pay. Do not, it should never cause a financial burden.
Correct.
Right? Because you're buying this for your peace of mind.
Correct.
And if you want to have ample liquidity to take care of your other expenses, do not opt for a limited pay.
Correct.
Yeah.
As you saw, folks, that there are a lot of factors that you need to consider if you want to go in for a regular pay or a limited pay. Now, if you have considered buying a term insurance and if you have any doubts regarding that, please feel free to put them in the comment section below and Ajay will be answering that. Now, Ajay, thank you so very much for clearing the air between regular pay and limited pay. And sorry for telling that you didn't tell me about the discount.
Yeah, that's okay.
Now, folks, that's it for this episode. And like always, if you found this video helpful, drop in a like, smash that subscribe button, and as always, happy insurance hunting.